Hello, everybody. Welcome to the show. This is Trading with Livevol. My name is Stefan. This is where I trade my own Reg T account, and I use LVX to trade. So I talked to you guys 2 days ago, and basically it seems like a lifetime ago in Shire Pharmaceutical. So I think back then it was trading like 253. I was going to do some kind of butterfly, sell some put. Then I went and I checked and I saw this action. So back then it was this day right here with this volume. You see how this huge volume, and it finished up, and this was when people thought, this was like Monday when basically people were thinking the deal was going to get done. They're crossing the T, dotting the I. So my butterfly, which was the 250, 260, 270 butterfly, didn't seem as good, and I'll show you guys why. Because, and for those of you guys who don't know what I'm doing with this calculator, I'm just trying to figure out what the takeover price is according to the rules. So basically at what did they close around, like 54.50, let's say, right? Or 54.60. 54.60 times 3 is the ADR is times 3 times 0.896 ratio, right? Plus the cash component, which at the current exchange rate is about 124.50. Came out to 271, and I was thinking there'll be some kind of a premium attached to it, 263, right? So if it looked like AbbVie was moving with Shire, so I thought there was a chance that if they announced, AbbVie could jump up a buck, and if they did, this price would go to 267 is where Shire's stock price would settle. So essentially, I rolled it up. So I bought the 60-65 call spread, I think like 75 times. So I can actually have a better way of, like basically I would actually make money even if it went to 65 and beyond, all the way up to 70. So that was my strategy, and that's what I did. And then what I did was, you see these 35 contracts I have in the puts? Well, basically I bought these for like 70 and 75 cents that day on Monday. Let me see if I can actually find it here. Because as I was telling you guys, as I was buying them, I didn't want to get, I didn't want to lose everything I made, right? So it was prudent of me to buy some puts and get myself protection for a cheap price, basically as the stock was going up and as volatility was going down. So let me actually go to Shire. Let's see the transaction date. See if I can see. Yeah, so you see like these July 240 puts, I was paying 70, 75, 75. So they were very cheap. So I was just buying them to protect myself on Shire going down, right? So fast forward to the following day. So this is the next day, right? So yesterday, basically, both AbbVie and Shire just started going down. I didn't understand why. And then basically found out later that I guess the US government is so tired of all this inversion situation that the Secretary of Treasury basically asked to do a retroactive law that says that you can't do that starting in May 2014, and and that's why basically it's down. Now, if my belief is that we live in the greatest country in the world. One of the things is this process that we go through in politics. So it's like a strength and also an Achilles heel, right? So the fact that things move so slowly and that you need consensus is many times good because it prevents somebody just doing something crazy. But also, unless you have like overwhelming consensus, the government is naturally going to move slow. So when I actually read that it was the U.S. government that caused the stock to go down, I pretty much thought it was a joke because there's no way the U.S. government is going to be able to pass that in time, right? And doing it retroactive, which they've never done before, would be unprecedented, and I don't think it would really fly, right? Plus, in terms of them putting in new legislation with the midterms coming up, nobody wants to, jeopardize them getting reelected, so nobody's going to stick their neck out on any of those things until the election is done, right? So my thinking is it was a non-event, but obviously it is something. And I think it could have a material effect because there is now a new factor into this whole thing, which is the U.S. government can actually pass something that can prevent AbbVie from finalizing this deal with Shire. So I'm sure they're talking about it right now. And what this could cause, and this is another factor that I read that I did not know about until, basically a couple of days ago, is the fact that Shire can ask the British government for an extension on that deadline to consummate the deal. So you can actually, that's another factor that can happen. So all that being said, basically I came in and I was just trying to reduce my risk. So I was actually trying to get out of all my position and then just have myself left with this 260, 265 call spread. But for whatever reason, I couldn't get all of it done, right? So, sorry, I'm kind of thinking as I'm doing this. So basically, this is what I'm left with. Let me show you. I'm going to run this at one vol. So this is basically how my position would look at expiration. So this is my position at expiration right now. And so I have this huge range of where I lose money, right? Like if you see it, I lose most right here at 240, and then basically even at 250, I don't actually make any money. And to me, the only real money I'm gonna make is if this deal just completely falls apart and I'm gonna make like 50K, but most likely that's not gonna be happening. So the most likely case, my thinking is that either they're gonna delay consummating a deal, or maybe even if they do the trade, the stock might only bounce up to 250, which in turn I'll still lose $5,000. Now, one thing I want to kind of clear up in terms of my P&L is, so you see how I'm down 11? The funny thing is because I had all this juice and yesterday the volatility went up 4 points, I actually made another like $9,000, $10,000, or $11,000 in insurance. So I actually made 11,000. So I was up like 30, and by yesterday's close, I was up like 41 or something. The reason I didn't make anything yesterday, and I'll cover that a little bit later, is that I had LO, Laureate, and Reynolds, and those things pretty much. Sorry, they pretty much sucked it up for me. So I lost $7,000 in LO and RAI, even though my position in there wasn't that big. Today, IGT, it was announced that they are going to get bought over by, I guess, GTech for around 19 bucks, which got a nice pop, and I made a little bit here. So basically, you know, so yesterday I lost 7, but I made it up on sharing, and today, you know, I made some on these other stocks, but I'm giving my money back in sharing, and so basically, you know, I'm kind of like a push overall. Probably just down whatever I lost in L'Oreal and Reynolds. If you actually want to combine the 2 days, where's the difference? The 7K came from those two basically not working out for me, and everything else kind of staying the same. So, you know, right now, you know, I'm like at a point that I don't think the upside is that great. I don't think it's going to go to 64. I don't even think it's going to go to 53. Hold on. Yeah, so I have all this, as you guys know, I have like all these, sorry. I have all these alerts, right? So this was my alert. It actually went through this the whole day. Looks like it's actually gone past it for the first time. So this was my alert, 53. If you can look at it, I passed it here and it's been recovering. So who knows what the news is? Maybe it's oversold, or you know, people think there's value in AbbVie no matter what, whether they go through with the deal or not. They think it's worth more than 53 bucks, or maybe they're gonna announce something soon, right? So they're anticipating some announcement. But in either case, at 53, which isn't too bad, right? So at 53 times 3 times 0.896, right? It's 136 plus 124.50, which is 261 times 0.97 is 253. So this might be where the stock ends up if the deal gets done and AbbVie doesn't move, right? Now, why am I multiplying the final by 0.97? I don't know. I just use that number as a spread. What I'm thinking about is, let's say they get this deal done within 6 months. If you did that ARB, so if you sold AbbVie and bought Shire in anticipation of the deal closing, you can make 3% on your money in the next 6 months. And then basically that's a 6% return over the course of the year, and that might be something that people will be willing to do in terms of risk versus reward, right? So it's just a guess on my part. It could be higher or lower. I don't really know, but I had to put in some number that I think is going to be where it's traded at, because even if they go through with the deal, unless they close like within a month, which I highly doubt, it's not going to trade like 265 or whatever their fair value is right now, right? So you got to always consider the time in which it takes to close, and then discount that from the final price. IGT is a perfect example, right? It's trading 17 bucks, even though I think the deal price is around 19, and they're probably not going to get done until Q1 and Q2 of next year, because they pretty much have to, I think, write letters and get permission from all these different places to have this switch and stuff like that. So it takes a while to get it done. So for Shire, now my thinking is, if you look at my working trades, I'm trying to sell more of these straddles right here. So let me see if I can see my risk chart. So this is my risk chart now, right? So if you look at it, at 45 I lose 15, at 252 I lose 46, So let's say I decide to sell 5 more here. Right now, I'll lose 11, and then if it goes to 52 bucks, which there is a chance it could be, I break even, right? So, and then if it goes down, I still make, but I don't make as much, which is why I have this offer in there right now for 290. Not sure if I'm going to get filled, but that's my logic behind selling this straddle. So I sold already 5 of them. I'm going to sell another 5. And basically make sure that if the stock ends up at 250, basically these straddle goes to 0, and I can collect that premium, which is pretty substantial right now, right? So I should get rid of this so you guys can see what that straddle's worth. So right now that straddle's worth 215. I put in 1290, but you know, it was like 1290 was the midpoint when I put it in. Probably not going to get filled right now, and I might have to adjust it down later on. But as you can see, you know, the great thing about this is what I love is I can keep adjusting. So let's say like I don't do that, but I just go, you know what, I'm just going to sell. See how there's I got 5, 5, and 7, so I can sell 9 of these without really affecting my a margin. Maybe I'll buy 9 of these to make it 75-75, right? Let me run this one vol again. Right, so my max loss now is 16. But I lose 10,000, so I have a bigger loss. I'm pretty much locking in a $10,000 loser if I do that. So I kind of was doing it before and I didn't like it, so I didn't do that. Another thing might be, you know, maybe selling another 9 lot here, right? So that's 14, 21, 26. You know, that might make it a little bit better. And so that's the good thing about it. You don't need to like redo it. You can just kind of mess around with it the whole time, and that's what I do all day, is kind of like mess around with these sim columns until I get exactly the shape I want. And you know, right now my thinking is I'm gonna lose 5 grand if this deal goes through. You know, I'm almost rooting for it to like I'm almost rooting for AbbVie now to completely just walk away, which then the stock will trade around 215, and I have a, you know, chance of making, you know, like 50 grand, right? But you know, that's kind of wishful thinking. I actually think they're gonna come in or delay is what I think is gonna happen. If they delay, I don't know where the stock's gonna go. It might stay right here, which will be, you know, $15,000 loser more if it goes down. So my risk is about 24,000, which is pretty much, you know, I'll still make 6,000 overall, which when I started this trading, if somebody said, hey, you can make 6,000, I would have been pretty happy. But now that I've already made, you know, 40, now that I made about 30 on this, it would be a shame to lose all that, you know, because of this final couple of days. But in either case, I'm constantly tweaking with it, trying to figure out what could happen. So, you know, right now, which is crazy, I was always thinking of getting the deal done. The best scenario, I think, is if the deal totally breaks apart, which I said was a low delta. The highest delta, I think, is that they do come with the agreement, but I don't think AbbVie stock is going to go that high because there is that possibility of them not closing that deal. So I don't think the upside in AbbVie is that great. So I might actually end up losing about $5,000 to $10,000, even though they close the deal. because AbbVie's stock price isn't going to be that high. Another scenario is that they'll delay it, which I don't know what the stocks is going to do if it delays. I almost feel like it's not necessarily going to go down. It might actually go up because it means that they're still working on it and they think it's going to get done, but they need more time, right? So it might actually get a small little pop, but obviously I'm still going to lose. So that's kind of what I'm dealing with right now. You know, and I didn't take this off because of the scenario, but I sold this. So I'm selling some puts. So I bought these for 70 and 75 cents, and they're worth $4 right now. So, you know, what is that? 330 times 35, right? Yeah. So I made $11,000 on just those 35 puts that I bought. You know, in hindsight, I should have just bought 100 of them, and then, you know, I would have had to not worry about anything. But it is what it is. So this is my position now. My best scenario is if it goes to 65, but for it to close 65, I think AbbVie actually has to trade around $54. Let me actually do that times 0.896. Sorry. 54 times 3 times 0.896 plus 124.50, 169 times 0.97. Yeah, so it would have to go up another $1, which there's a chance it could happen. And if it does, I'll be super happy. And I can make, not sure what I can make. I think like between 20 and 30,000 actually. 40,000 if it closes at 265. So it would be a pretty awesome day if it closed at 265 right now. But you know, I'm not really counting on it. I almost feel like if I can break even from here, I would have done pretty well. But I'll see how that goes, right? So that's pretty much my thing in Shire. Things could happen, obviously, and I'm counting on it to happen. So it's a very fluid situation. So I just try to keep tabs on it. But you know, I think basically what you're trying to do is, in terms of my trading. As you can see, if you've been following me, I actually have way more losers than winners. But in the end, what counts is your account, not so much how many winners you have in terms of numbers. Generally, what I try to do is, and this is why I love options, is you try to limit your losses when you're wrong, and you try to maximize your gains when you're right. And with leverage product like equity options, you can do that if you design it correctly in terms of risk reward. So that's kind of where I'm at. Hope didn't confuse you guys what I said. Basically, I'm trying to push from here because I am up. I'm about 40. You know, I'm up about $31,000 currently so far in Shire, and so I just, you know, trying to keep as much as I can, and I still think they're gonna announce the deal. So that's what I really think is they're gonna announce the deal, because to me, that whole thing with the U.S. government banning the inversion, to me, is very, very unlikely. So, you know, just living here, I just feel like that possibility is so low that I would personally almost ignore it. But I think as, you know, owner of AbbVie and Shire, obviously they're risking way more, right? The whole future, so they can't just ignore it. They have to take that part, even though how unlikely that might be, into a factor in making the final decision. So, maybe they're working out, some kind of breakup fee, or I think Corvidian and it escapes me who bought them. But basically, they have a clause in there too, where if there is a inverse tax laws that gets put in, basically the deal gets called off, right? So they might actually be working on some deal like that. I'm really, really crossing my fingers that they're not gonna extend it, and they do try to make the announcement by tomorrow or by the deadline. So that's it for that. Let me just cover this because it was so busy yesterday. But Laureate, so this is the only position I had in Laureate, and basically I took it on the chin in tune of I think like $4,500, because basically the end price was I think like $68 if you don't take into debt, but if you take into debt, it's like only like 60. It was basically horrible. It wasn't like something you expected. RAI, as you guys know, I had this spread, short this and long this, and I thought this might actually come in because if they paid a low price for L'Oreal, this would be good for RAI stock, but that obviously that was wrong. So I lost 2,500 there. So overall, in this like two merger stocks, I lost $7,000. In IGT, as you guys know, I had this position, right? I was actually short the 20s, so I bought the 1620s for like a buck, like 30 or something, $1.20, thinking that I can triple my money if I'm correct. And basically, I sold these for 50 of them for like around 90 and 92 cents. Let me actually see this thing. Should be right here. I think it was 90 and 92. Yeah, 90 and 95. So basically, the average price of 92 cents. It's now 107. So that's 14 times 50. So $700 is what I could have made more if I didn't sell any. But I had to sell this. I ran out of cash, and I needed to actually get some cash so I can buy some more options in Shire. So the funny thing is, even though I have like 140K in the account right now, pretty much every penny is tied up, and most of it is due to Shire. So I'm kind of eager to get that off the books and then try to come up with new ones. So there's a couple of new ones that I did go into. I don't know if I actually mentioned it. I think I did probably in passing, but TRW between 11 and 12 billion. 11 billion is about $100. 12 billion is 110. So I put on this little butterfly, but it's like a staggered butterfly because I felt like the skew was to the upside. Let me see the risk chart. So this is my risk chart now, and if you guys know, what I didn't want to do is that yeah, basically it's the same line. I didn't want to pay for it, right? So if you look at it, I created this little line right here where I make money slightly because I didn't think it was going to get done this week, right? So I designed it like in terms of my overall strategies. I knew they were at the early stages. I didn't want to, I wanted to bet on it in August, but these are like $4. So basically, to subsidize it, just in case, like, it could happen that they walk away or whatever, like it might take longer. I didn't want to have it burn data while I had those calls. So I basically designed this trade in July so I can actually make money. Even though it's slight, basically I will get no decay and make a few $100, and then the following month I can have this. So after this month, I can try. After this month expiration, I can try to do whatever fits the situation. There's a couple of other stuff that I think I'm currently looking at. TWX today was announced. So now I've really done deals before with this Murdoch gentleman. When he buys something, he pretty much goes after it very aggressively. I was trading Dow Jones, and I couldn't believe what he paid for at the end. It was good for me because I made a lot of money, but it was like, I don't know, it was kind of a ridiculous price. I think there was actually insider trading there too that people got convicted on in China. But basically, this guy, once he likes something, he will go after it. So I'm thinking like there is like some opportunities here, but right now I have no cash to even invest. But I would have to really read up on this and figure out what the exact situation is. My general thinking is, right now kind of neutral. So I'll see what happens. So they bid $85, which got rejected. So who knows what the final bid is? As you guys know, I always feel like the first bid is not the final bid, and because this whole environment is really, really favorable for you to merge. I think there's going to be a bunch of mergers, and you know how I was doing all kinds of different strategies, but there's so many so many mergers going on. You can just kind of solely trade the mergers right now because of the environment, and I think you can do really well. And I'm only saying that because I've done it in the past, and it worked out well for me. So there's other stocks. Family Dollar is another one that Carl Icahn invested at. It's almost like at a point where it's not too bad because once he announced that he invested, it went up to like $68, but now it's going back to where it was before. Part of it is because the I think Dollar General, which is considered the best in the breed, the guy who runs it is going to retire. So I think Carl Icahn was hoping that these guys buy them out. But if now that guy's retiring, who can buy these guys out? So that's something that's in that you have to consider. Another one is AGN. And I was looking at what's unusual about this is I think like in December is when they're going to kind of do all the decision on getting new board members and stuff like that. But the actual bid is $72.50. If you look at the spread, is very tight, which makes me think that in the end there's a small possibility that there's actually going to be an increase in that hostile bid to ensure that it gets executed. So and also a lot of times when it takes a long time, the people who are buying Allergan stock right now will be buying solely to vote yes on that deal, right? So all the people who are like originally Allergan shareholders right around here, at this point they might have just gone out because they didn't want to risk it, right? But all the ARB guys are now getting in because they can make up to $7.20, $7.50 if they actually stay in here and vote yes on the deal. So now to me Allergan is in a very precarious position, and I've seen this a bunch of times before, and I think their chances of actually surviving as a sole entity is going to be very, very low, which is why I think their Allergan shareholders wants Allergan to go out and try to acquire or spend the money that they have, so they so they can try to fight it off. But in general, I think all these guys who are getting in here are the ARB guys because they want to vote yes on it. So did I miss anything? Oh, so that's about it. I didn't want this to be like 2 hours long, so I just gave you guys the ones that I did. Oh, wanted to tell you guys that basically, if you guys want to try Livevol X, just go to livevol.com and click on free trial. And also in our Livevol community, you see this Trade a Minute $100,000 challenge. I posted a video and kind of explains what they do. They're going to start on Friday. So he's going to try to turn $3,000 into $100,000. If you guys do try, I have a we have a deal. Just type in code live569 and you get 1 month free access. So you can try it out for 1 month. It's a 4-month challenge. So, you know, who knows what can happen during that time. But this time he came really close. So let me actually go to the site. He actually ended, so he started with 3,000, ended with around 49,000, which is fantastic. Now, if I knew that he was going to do this beforehand, I would have, you know, probably made a ton. But I made a fraction of what this guy really made just because the 2 prior challenges didn't go as well. But this guy really knows what he's doing, and I am a big fan. So I wouldn't be, even though there is a referral relationship with these guys, I would not be referring you guys to him unless I didn't think he was legit. And he does all the trades live, so it's not like it's way better than me. He actually does it live, and he actually says like, hey, I'm going to put on this trade and this is why. And then you guys can decide whether you want to follow it or not. I don't follow all his trades just because a lot of times I just miss it because I'm doing something else, and I have to wait like 2-3 days to get in. So it's not an ideal situation, but for you guys who trade at home, this might be perfect for you guys. You start off with 3,000. You know, if he actually repeats this, you know, that's 50,000. That's an incredible return over the 4 months. Just make sure you type in live 569, and you can get 1 month free. So that's about it. Hopefully by Friday, I'm telling you guys that something good happened in Shire, and that they got bought out, and that AbbVie is trading like 64 bucks. But in the end, you know, it's kind of like you're just taking percentage bets, right? This is, I know people cringe at me in the financial institutions when I say this is kind of like gambling, but it's, to me, it's the largest form of gambling. But there are like hundreds of variables, and there are millions of players in this casino, and it's a legit financial. You're betting on stocks, right? Financial institutions. It's not like just on random numbers, which I think makes it a lot more interesting and makes it a little more predictable if you have the skill for it. So as you can see, one other note, I don't mean to keep you guys longer than I need to, but if you look at, you know, so if you look at like since like middle of May, when I was down like 15, right, to right now where I'm up 33, that's a $50,000 change in literally a couple of months. So, you know, as I was trying to tell you guys, if you guys are struggling with options, hang in there. Don't think just because you're losing, you have no future. You're supposed to lose at the beginning, just so you guys know. But if you're trying to learn and you're trying to figure out a strategy that works. Now, I can promise you, when you guys do find a strategy, whatever that strategy is, it could be completely different from what I'm doing. You guys can make tremendous amount of return in options, and returning like 100% in equity options is fantastic, but it's not like trying to return 100% in equity if you just invest in stocks, right? It's doable. That's what I'm trying to say. I've done it many times before, and you know, the key here is that you understand risk and reward, and you're putting on the bets accordingly. So you know how I do that? Did that kind of like the ratio, like a decision tree on percentages of what's going to happen. You kind of bet on that, and then if you're consistent on it, then you can do pretty well, right? So what's my risk here? Just so you guys can know, like, to me, my biggest risk is that it just ends right around like the 240 area, right? Then I'm gonna get killed. So I'm trying to figure out what my chances are of that happening, and I think it's pretty low. So I want to keep, I want to do this where it's the least amount of chance, and then I want to put this where it's the most amount of chance that could happen. So I feel like there's a better chance that it's going to trade 265 than 238, right? That's basically what I'm betting on. But even if I bet it on that it's 50-50, you can see that I'm going to lose 25,000 here, make 40,000 here. So it's actually worth that bet if the percentages are exactly 50-50, because your payout is 40,000 versus 24,000. Now if I had $1 million, this would be a no-brainer. But obviously, if you have $100,000 to start with, then losing 25,000 is going to be pretty painful. So as my account gets bigger, those decisions will be a lot easier. But right now, I'm basically in a lot more danger than I was before. So, but that's kind of how options go when you start out, and hopefully it'll work out better as time goes. But I want you guys to take care. Hope your trading goes well. And I will talk to you guys on Friday. Good luck. Take care. Bye.